Welcome to Trading Lounge and the Bitcoin video for the 22nd of October. I thought I would just do another one because we've taken out the high there at wave 1, and that's kind of significant really because we had an alternative count as all of this down here as wave A, and then an A and a B and a C wave here, because it's quite clear that we have 5 waves here for wave B and then down for wave C here. But because that top's been taken out there, because we got 5 waves here, that means that we've had our correction. We'll get another 5 waves coming into play from this point. So we can pretty much remove this corrective pattern here now. And we can just really focus on the bullish pattern. I will give it some consideration to see if I can figure out another corrective pattern that can take us down. So I'll give that some thought. However, it's quite interesting really, because as I mentioned before, these are what I call the trading levels here. You'll need to go to our website to see that, but essentially it's just using Fibonacci as a price ratio here. So 10, 20, 30, 50, 1, 2, 3, 5, 8, 13, 21, but we don't use 21, we use 20, and then we use the power of 10 to go to 30 again. So we break that down into major levels, medium levels, and minor levels, sub levels, and micro levels. So what we can also do here now is that if I just copy that and put that there at 15, that's what we call the medium level, and that would be our next target. We do have another major level in here at the moment, which will be 13, because we go 1, 2, 3, 5, 8, and 13. So we need to put that major level in there. So we need to navigate that at the moment. So we'll go in and talk about that, but I just really had the 10,000 here because it was the balance point really for this whole pattern that we've been looking at so far. The other interesting point here as well is that this is, I suppose, probably not quite really. I was just going to say this is the first time we've taken out a previous high, but that's not really the case, because really we're in this same leg here. Would have to take out this high for that to play out there. So, but it's looking very good as a bullish count, I must say. So what we're going to do now is we're going to drill in into the intraday and pick it up from this wave 2 here. But the takeaway from here, if you know Elliott wave a little bit, then we've got wave 1 here, wave 2 here. So we're in this wave 3 going to the upside, right, of that cycle degree. And this is primary degree, and this is intermediate degree and minor degree here. So we're in this large third wave here. And then we've also got this 1 and 2 of primary degree here going into wave 3 up here. So we'll be looking for, well, let's just fill this out a little bit, shall we? I mean, I'm a very conservative person when it comes to wave counts. I don't like to, I'm happy to look into the future, but I don't want to, tell people the wrong story as such as well. I don't want to get people excited for nothing. So I always just work step by step. But because we're in this third wave, I'm going to put it in here and call it for what it is. So we're looking between wave 2 and wave 3 up here. We're looking for 5 waves. So 1 and 2 in blue of intermediate degree, 3, 4, and 5 here for wave 3. Then we'll have wave 4, and then we'll have wave 5 pushing up higher from that point. And then that will be, we'll need 5 waves for this wave 2 to turn into wave 3 here. We'll need 1 and 2 and 3 and 4 and 5 going up to make that wave 3. So all very interesting. But let's just come back to reality for a little bit, and let's just drill in to see what we have here. So in a nutshell here, we really want this 13,000 to play out as the tested support in the market. So that's what we're going to look at next. So we'll go to the daily chart, and let me just open this up a little bit. So from this wave 2 here, I don't think anybody can disagree that we have wave 1 and 2 here, and 3 and 4 and 5 here for wave 1. The wave 2, as I've mentioned in my other videos, we also had a target down here at the 50-60% retracement level, so that was always on the cards. But once that B wave here had been breached, which it did in my last video, we could remove that wave 2 that was down here at the 61.8% and bring it back up to here. So having a very short, small wave 2 here really tells me that the market is very strong. It also tells me too, over here, when we look at this structure here for 1 and 2, we can see that this wave 2 never pulled back to the 61.8%, which would have been further down at the lower end of that wave 2 character. So it was very shallow as well. So that's kind of like a bit of a fingerprint really for it. So we could use this whole structure here as a bit of a fingerprint really. So we can also look at this wave 1 and 2 here. We could use that over here as well. So I'd expect this wave 1 and 2 to be shallow over here as well. Anyway, moving up through here, let's just, I'll just need to adjust things somewhat here on this one. So let me just clean these up. So we could be all the way up there for 15,000 for wave 1, and that will bring into wave 2 here. So we can be like this as well. So we're looking, basically what we're looking for from this wave 2 here, we're looking for 5 waves up to make minor wave 1 here. And we've got minuet wave 2s and 3, 4, 5 here. So we're looking for 5 waves in this structure here. And we're at 13,000. So if there's going to be resistance, if there's going to be a corrective pattern, then we always drift over to the closest largest number, and the 13,000 being a major level would be the case. So that's what we can expect at that point there. So this is what we're looking at. Let's go in further and pick it up on the intraday on the 4-hour chart. So we need to squash it up a little bit here. So we've got our wave 1 here and wave 2 of intermediate degree and a minor ABC pattern here. And then we're going from intermediate wave 2, we're going to go up to minor wave 1 and then minor wave 2. So we're looking for 5 waves here at minor wave 1. So we'll have these blue ones here, minuet wave 1 and 2 and 3 or minute 1 and 2 here. Sorry. Lost the plot too early in the morning here in Australia. 1 and 2 here, and 3 and 4 and 5 here for this structure here. So also too, we can leave that for a moment. Between wave 2 here and wave 3 here, we're looking for 5 waves as well. So the green waves here of wave, let's just open this up a little bit further. It's just fractals, and we're just breaking the pattern down, and once we break it down to find out where we are, then we can expand it back out again to see what the larger fractals are, and that's what we've just done. So we've got wave 1 here and 2 here, and then we're looking for wave 3 up here in green, and 4 and 5 here. So between green wave 2 and green wave 3 here, we're also looking for 5 waves as 1 and 2 and 3 and 4, and going up for wave 5 here. So it does appear that we're getting an extension in the 5th wave here. I could also perhaps count that a little bit differently as well, but I'll just leave it for the time being. The main takeaway here is, as I mentioned before, we'll be expecting some corrective patterns across the 13,000 area here. So it's important in terms of there's 2 things going on here in terms of trading. So the first thing about the trading here, these green lines here have been entry points which we've taken, and today I've moved the stop up from wherever it was down here up to here would be fine at this point. Now I've got a wide stop here. Now the reason I do that for is two reasons. One, to lessen the risk, you can decide to take a percentage at the 13,000. That will diminish the risk because we're in an uptrend. We really don't want to be stopped out, do we? And as I've mentioned before, it takes courage to stay in a trend, especially when you've got leverage involved in it. So what we can do is we can look for this particular pattern across the top here. We don't know what it is going to be yet, but if there's not a lot that can happen, so we can break it down. We can break the problem down. Now the problem we can break down first of all is that the market can go up to the 13,000, maybe sit there a little bit and then drop and never came back. That's obviously one thing that's true. That could happen, that's one thing. So the other thing that could happen is it could just continue straight up through and never come back to the 13,000. So they're the two outside horses, so to speak. Now the general situation is that we would have a correction across here. Now if we were going to have a correction across here, then there's three things that can play out here. So I want to have a look at those. That's a little bit large, so we'll squeeze that down a little bit. This one here, if we imagine this is the 13,000 across here, this is what I call the overshoot pattern. The overshoot pattern doesn't stop at the 13,000. It will push up, and it could push up to 13,300 or 500 and then collapse back down. And in that case, when it doesn't stop here, then what's really occurring is across the 13,000 here, it really becomes the balance point in this particular pattern that we're looking at here. A little bit like the center of a triangle, really, on a horizontal scope. And if that's the case, then we find our entry over here, and possibly we could move in down here as well for that. The second, and this is not the most common pattern. This is the second most common pattern here, this one here, which is part of the classic trading levels pattern, where we have the arrival, the reaction, the first high above the level, and it doesn't come back down below the level. But what we do in this case, if it reacts from here, and yes, it can go up a little bit, okay, so not a big deal, but we're looking for that first reaction. And once that occurs, then we look for the first high above the level. And this is really important because this becomes our reference point here. So we use that as an entry here, and we could possibly bring it down through here as well. But most of the time, the market will drop back down below the level here. And this is the most common pattern, and this is called the classic trading levels pattern. I'll just give it a name anyway because it's on the trading level. So it's the most common pattern. So first of all, we need to see if we get a reaction from the 13,000. As I mentioned, it can be above here into the sub levels, but I won't talk about that at the moment. So we get our first reaction, and then we just simply look at the first high above the level, and that becomes our reference point here. And that's normally within minor group 1, so 100, 200 and 300 in there. So we can talk about that a little bit. Now then we see this move comes down to the level. Obviously there's support there, so it will bounce back off that and then eventually drop through. So we look for that, and then we can start building in the trade to the long side here. But the safe trade is having support again back over here on the 13,000. And this little pattern here, well, this big pattern here, we could wrap that up in a smaller fractal pattern and put it just in here. So we would have the arrival, the reaction, the first high above the level, an ABC correction, and so on. So it's the same. And this is the most common pattern. So we will see, first of all, if we get this reaction, and then this is what we'll be looking for here. So the reason of taking a percentage profit over here is really to just to be safe, and then we can put that money back in over here again. We may get a better setup, or we may get a worse one, or whatever, but what you've done is you've saved time because if you're trading a CFD or something, then you're going to be paying overnight financing, which can be very expensive actually. Well, it is really expensive. Anyway, that's what we're looking for at that level here. So we're looking for the arrival, because this move up here still got a little bit more to go. We can check that out, the arrival, the reaction, the first high above the level, the ABC pattern here. And that's the other thing that I need to point out too, if I can just come back here to this. This is normally the third wave, the fourth wave, the fifth wave, the A, the B, and the C correction here that can pull back to the wave 4 of 1 lesser degree and then move up from that point. So just good to know that as well. But, you know, Elliott can be a little bit tricky, but this is something that you can easily identify. So that's basically what we're looking for at this level here. It's a little bit like this one here, the arrival, the reaction here, the first high above the level, the A, the B, and the C correction here. And then the little level here. So really what we've done here, we looked at that high first and we brought it down to that one and then down to that one. It's simple, it's effective. Sometimes it's not an easy picture or pretty picture. Sometimes it gets a little bit tricky, and like everything, you need to do your apprenticeship in everything, so you need to do that. Now, the second thing is here, of course, is that, as I've mentioned, I'm personally not trading this with any leverage or anything like that. I'm just treating Bitcoin the same as gold. That's how I see it. I see it pretty much the same product. It has a limited amount as such, and yeah, so I don't really see it as a currency as such, but anyway, that's a long story, but I see it more of an asset sort of thing. So what I've been doing is I've just simply been buying, since I've really started the videos, I've just been buying 1,000 Australian dollars each week. So I normally do that on a Thursday or Friday, just depending on what time I've got. So the little blue dollar signs here is roughly where I've purchased. So I've had these $1,000, $2,000, $3,000, $4,000 Australian in here. So now that the market's up here, that's given me a profit of $500. Not a lot, based off the 4,000, but this is an investment for me for you know, for a long time. So I'll just keep dollar averaging, moving into this market. So, but today I bought another $1,000 here. So that's $5,000 I've got in the market at this stage, and I will continue to do that. And as I mentioned before, once we had taken out these tops here and we can kind of prove that it's a bullish trend, then I will probably start putting in just some extra money in this. So I'll probably end up putting, I don't know, maybe $20,000 or something in this little area here somewhere. I'll just give it a bit more thought and clear it with head office as well. That's my wife. And yeah, we'll take it from there. But anyway, that's what I'm doing. This little dollar sign here is just not here. Just using that to copy that. So that's it really. But what I want to do now is a little bit boring, but I want to take you into this little structure here from wave 4 to wave 5 here on the tick chart. So 100 ticks. And we can just check on that. I'll have to bring in more data. So this is it here. So we're picking it up from this wave 4 here. But also too, what I want to do is I just want to mention that from this wave 2 here, I'd counted this as 1 and 2 and 3 and 4 here. We've got our extension in 5. So I'm wondering if I've made a mistake in this little space here, and I need to look at this as wave 1 and 2 here, and 3 and 4 and 5 here for wave 1 here, and then have this little wave 2 sitting over here for this. I'm just going to dull it out. I'm just going to have it as a dulled out alternative count for that, or something that I just need to redo, because this is really looking like a third wave in here for this. But anyway, we can come back to that. As I mentioned the other day when we were counting this to the upside here, there was two ways to do it. There was one way that I'd counted each little move and done it in a conservative view, and then there was another way, you have to check last video, that we could extend further up, and obviously we have extended further up. So I'm looking at this as 1 and 2 in here, and 3 and 4 and 5 here for 1 and 2 here, and then building up here. So from wave 2 here we're going all the way up to wave 3. So from wave 2 here all the way up to wave 3 here, and then wave 4, and then wave 5 to make wave 3 here. And as I've just mentioned, I may have to adjust that for an even stronger move up. But once we've got there, once we've arrived here, then we'll have an A and a B and a C wave here. The other point too that I wanted to make is that this is a major level here, and then 100, 200 and 300 there is the next is the minor levels, and then we've got 500 after that. So just the Fibonacci numbers as price, and after 5 comes 8. That's right. So 1, 2, 3, 4, 5, 8, and that's the same on the downside here as well. We can look at between 12,000 and 13,000. This number here is important, the 8 here, and also the 5 here we can use, and then we come down into the 3 here and so on, 3 roughly there. Anyway, we've also got group 2 in here as well. So group 2, a little bit tricky here, but group 2 is 65, 72 and 80 here. So I'll put them in a bit later, but that will probably support that space in this area. So anyway, we'll get to that a little bit later. No need to do that right now. So from this little wave 4 low to wave 5 up here, we're looking for 5 waves in blue. So we've got 1, 2, 3, 4, 5 to make light this aqua color blue, and 2 here, and then going up for 3, 4 and 5 here. So from wave 2 low here to go to wave 3 here, we're also looking for 5 waves. So we've got 1, 2, 3, 4, 5 here for 1 and 2, and then that will take us up to here for 3, and then we're coming back for 4 and 5 here, and between 2 and 3 here we have 1 and 2, nice strong third wave, fourth wave, and we do have the extension in wave 5 here. So it's a bit like a DNA, fingerprint, whatever, of the structure that we're looking at. And as I mentioned, this wave 4 here to wave 5 here, we're looking at that as an extension, and we can see that this wave 5's got an extension. So this may play out further in here as well. We may end up much further up into this space. So we'll just see how we go, one step at a time, one level at a time, and so on. But yeah, that's where we are for this at the moment. Alrighty, thanks for tuning in, and thanks for the support. Appreciate it. Cheers.